Good morning, investors. It is Monday, March the 30th, and taking a look at the charts for the AlgoTrades system analysis here, you can see the last week we saw a pretty strong sell-off in the market. We saw a pullback, and now we're forming a little bit of a bear flag here, very similar to the price action we've seen in the past where we see a sell-off start, bear flag, sell-off, bear flag, sell-off, and then we get into the volatility, and then we got into some bull flags here with a nice upside momentum. And of course, and then as we started to see a trend change with the bars changing color from red to orange, showing momentum and cycles returning up. And instead of it continuing to move higher and rally to new highs, we actually saw the market roll over in a very strong way, and it came right back down to the recent lows. Now, overall, this type of price action that we had running up was very strong. We saw big money flowing into the market. And it was very similar to what we saw back here where the market ran up, formed a bull flag, and then really kicked into an uptrend and took off for a week or two there. So that's where looked as though the market was heading, and instead of going higher, it rolled right over and went right back down. So the market continues to be in this heavy rotation where it just changes trend and then it seems to roll over. We got some pretty strong distribution going on in the market, very strong selling last week that really picked up speed to the downside. And this morning we're going to see equities trade a little bit higher up near the 2060, 2070 area, which also happens to be across this key threshold level. If we just put it right across here, right there, you can see we've got some pretty serious resistance zone, was resistance, and then broke through it. So it then became support, which we had support right over here. And then, of course, it gapped. The market jumped, bridged over it in overnight trading, got around it, and then it became resistance. We have resistance here, again, resistance over here, and then we busted through it with the Fed announcement, formed a tight bull flag, continued to move up, and the momentum was really starting to shoot to the upside. Instead of it running higher, we actually saw big sellers step back in and pull it right back down. So now we're at this point where we're below this key pivot zone, and price is going to be opening up right near that level this morning at around the 2065. So it's trading somewhere right around here. So it's going to be stuck under resistance. And with any luck, we're going to see this bear flag turn into some more selling. We're going to see sellers step in as we get to this key resistance zone. And we could easily see this push down to new lows and really wash the market out. At least test these lows, if not break it. Usually the market's going to want to pierce it by at least a tick or two to flush out the stops of any longs. And depending on how severe it is, we do have a pretty critical level down here. So we've got these two levels. I think if it breaks Friday's low, I think we're going to see a pretty substantial washout. We could see it come down, test the 2000 area, which is going to go right through the heart of the recent volatility and the previous low over here. So we find support somewhere down around that area. Really, that's it for the week. Overall, I think we could continue to see some choppiness. I think we'll see lower prices here overall. I think we're going to see the market trade in a relatively tight range here, and we'll see which way the market actually breaks. Now, taking a look at an article, some analysis I posted last week, if we just take a look at this big picture analysis, I'm talking about how the indexes are starting to show, they've been showing warning signs of a top starting to form for a while with distribution selling going on with the Russell 2000. If we just take a look at the charts for a quick visual here, the key I'm pointing out is that we're starting to see daily price volume on the bars really start to pick up and show volatility. And this is typically what happens during the mid stages or the topping phase of the market. This is in distribution of money going on is when we get strong intraday moves, and usually for strong intraday moves you need institutional money flowing in and flowing out, or at least flowing out, and the general public, there's usually buying pressure during these major tops because investors are very bullish. Things have been going up forever, so they want to buy the dips. So we see heavy selling, just like what we've seen in 2014 with large caps starting to pick up in the second half of 2014. And then we see the market kind of just rally back to new highs with relatively light volume compared to the selling volume. And this is an early sign that I think we're getting into a bear market situation. So this is still going to unfold for a while, but I think we're going to get a very sharp breakdown. And of course, we've got some serious key levels here that once they start to break, we'll be off to the races for a significant haircut in the equities market. Now, there's a couple different ways it can break down. It can break down huge and drop 50, 60%. This chart here shows us a quick visual. This is a monthly chart of the SP 500. How we've been riding up this trend line. We've got divergence on relative strength, so it's pushing higher, slowly grinding higher, and losing its upward momentum. And more or less, when we break this line, we're going to see a huge sell-off. It's going to come down to maybe test these October lows. Once it breaks these October lows, that'll be it. That'll be lights out for the market. It'll go into a full-fledged bear market and more or less break down just like what we've seen back in the past here. And again, what happened in 2008. Once you break these significant lows, then we start to see the market just go into free fall mode. So we are getting into this topping phase. We have yet to break down. We're still seeing the market grind its way higher, but we are seeing all the warning signs that price is going to correct. And the question is it going to correct all the way down to 1,000 or 700 mark, or is it just going to correct around 30% and do something like this from the past? This is a 70-year chart of the SP 500. We've had very similar price action in the past as what we're having now. And are we just going to see things kind of fade back and sell off for a year or two and just kind of work its way slightly lower and then just take off and rip to the upside for another massive super cycle to the upside? So there's a couple different ways it'll play out. Either way, I think we're in store for this year to see the market put in a top and continue to sell off pretty much through 2016. Anyways, that's it for this morning. Take care. Bye-bye.